Hello, everybody, and welcome back. Today, my guest is Quynh Le. She is a portfolio manager of the Dragon Capital Vietnam Equity UCITS Fund. Welcome, Quynh.
Good morning, Thomas, and thank you for the introduction.
So the pandemic is entering its third year. So how does Vietnamese economy do compared to its ASEAN neighbors?
So Vietnam applied the zero COVID in 2020, and we had a great success. And that's why we started quite a little bit later compared to other countries in terms of vaccination, but we ramped up the progress very quickly recently. And at the moment, Vietnam is number 6 globally in terms of vaccination rate, and number 2 in Southeast Asia. And we already have the capacity domestically to produce the drug to fight with the virus for the patients in Vietnam. So at the moment, all the economic activities have come back to normal. So we think that the recovery is really ready to take off in 2022.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
So many international companies are looking for an alternative to China as a manufacturing hub, also called the China Plus One strategy. How big is the effect on the Vietnamese economy?
So the FDI coming to Vietnam has increased steadily over the years since Vietnam joined WTO in 2007, and it has been the long-term story. And given Vietnam has the large population, high education level, and also low labor cost, so it is an attractive alternative compared to China if the multinational companies want to diversify from China, especially when China is applying the zero COVID strategy at the moment. We think that is the opportunity for Vietnam to continue to attract FDI to the country. And FDI has been the important contributor to Vietnam economy so far. So at the moment, it's contribute 70% of the total import and export value of Vietnam, and also 10% of the population working for the FDI sector.
The economic growth in China is cooling down. To what extent is this affecting the Vietnamese economy?
So China's economy still expanded 8.1% in 2021, and they target to grow 4.8% next year. So the weakening in Chinese local consumption and the collapsing of the real estate market there may be the problem may have some influence for Vietnamese economy. The first thing we can think of is that Chinese tourists contribute 40 to 50% of the total foreign visitors to Vietnam. And given the fact that China is applying the zero COVID strategy, we should expect that Vietnam may lose 40 to 50% of the foreign visitors coming to the country, but that only impact the tourism sector. However, on the other hand, as I mentioned, because China strict zero COVID strategy would be, on the other hand, the opportunity for Vietnam to win over foreign direct investment, the FDI sector, as Vietnam is now fully reopened, and we would welcome the FDI company to open their new capacity in Vietnam.
Global supply chains have been disrupted heavily during the last couple of months. So what are the consequences for the Vietnamese economy and for Vietnamese companies?
So this problem of the supply chain disruption did make the transportation costs increased significantly. However, if we look at the statistic, Vietnam export still grew 19% last year in 2021 compared to 2020. And the same situation happened in China. China also have the export increased by 30%, Malaysia by 25%, Indonesia 33%, and Taiwan 29%. So the volume of export still surged significantly regardless of the description.
Inflation is back as a topic in the financial markets, and with it coming possible rising interest rates in the US especially. So how real is the threat to an emerging market country like Vietnam from a higher US dollar?
So for Vietnam, actually inflation still at the record low level compared to the in the last few years. And we see that the monetary growth, the M2 growth only increased by less than 9% last year. So we don't see the risk of inflation because of the money supply. In terms of inflation construction, most of the CPI basket of Vietnam is from the food and foodstuff, and we has experienced the lower price of pork and rice in Vietnam. So that's why at the moment the inflation is not a big risk in Vietnam. And therefore, in turn, we don't see that the Central Bank of Vietnam has to increase their interest rate in order to cope with inflation. We believe that Vietnam will maintain a low interest rate environment in the next 1 to 2 years.
So the Vietnamese stock market is 50% higher today than before the pandemic. What has driven the prices?
The stock market actually rallied thanks to the strong fundamental of the listed companies. If we look at the earnings of the listed company, it still grows almost 6% in 2020, the start of the pandemic. And then in 2021, on average, listed companies increased their profit by more than 40%. So altogether, 6% in 2020 and more than 40% in 2021 explain the return of 50% in the listed market.
The Vietnamese stock market is still relatively small with a few companies. So where do you find interesting investment opportunities for your mutual fund?
In terms of size and liquidity, you might be surprised, but Vietnam is not a small market anymore. The total size of the Vietnam listed market is 350 billion US dollar, and the daily turnover is 1.2 billion US dollar. So Vietnam is actually larger and more liquid than some MSCI emerging markets. It's just because of the foreign ownership limit that Vietnam still apply on the listed companies that prevent Vietnam to be upgraded into the emerging market by MSCI. But in terms of size and liquidity, it's already traded as a EM market.
And in which industries do you find investment opportunities for your mutual fund?
So Vietnam is the growing economy, and it is one of the highest growing economy in the world. So of course, the Vietnamese companies doing well, and we can find a lot of growing stocks still trading at very reasonable valuation. So for 2022, for instance, on average, the listed companies still trading at only 11 to 12 times PER, and they can deliver on average more than 20% EPS growth in 2020, according to our research team.
Can you give a quick overview of your portfolio? So how is it constructed? What holdings do you currently have there? Is there a certain industry concentration in your mutual fund?
So we have four main themes. The biggest two main themes are the property development and the banking and financial sector. So for the property, because Vietnam will doing the stimulus package in 2022, and there would be a big push from the government for infrastructure investment. And certainly that is to serve with the strong inflow of FDI. And when the government invests in infrastructure heavily, then the property development would be the benefit sector. Secondly is the banking sector, because we think that the Vietnam will continue low interest rate environment, and it needs to loosen the credit growth target in order to support the recovery of the economy. So we think that the banking sector would be the main beneficiary from the credit growth theme. The third theme that we like in Vietnam is that the modernization of the retailing market. So we invest in modern retailing companies and e-commerce. We hold a top retail companies in Vietnam. Another small theme that we like is the stock brokerage, securities companies. As I just mentioned, that the stock market in Vietnam has changed significantly over the last 2 years, and the liquidity have increased more than 5 times. So the stock broker has increased their revenue and profit significantly.
So this was Quynh Le, portfolio manager from Dragon Capital. Quynh, thank you very much for being with us today and discussing recent developments in the Vietnamese stock market.
Thank you, Thomas.